It says the survey says sales expect to be relatively strong. 5% improvement over last year, but last year we did see a pullback and the year before, so relative is a relative word, I suppose.
Absolutely. I think subdued is probably a word that comes to mind. You're quite right. One compares it to a relatively low base, and as a consequence, 5% is not double digits, so I think one just needs to not be over-enthusiastic with the extent of the recovery.
If you look back to 2006, perhaps, we had retail sales growth of 12% heading into Christmas. It's going to take a while to get back to those levels, isn't it?
There's no doubt. If one analyzes the respondents in this particular survey, they have a very clear view on what's likely to happen to volumes, which is positive and up, and what's likely to happen to prices, which is going to be the same as last year or maybe slightly down, largely as a result of trying to get the consumer back into the store.
So we're going to see retailers discounting again to try and get those consumers in. And do you think we could see those discounts coming through before Christmas, or would it be after Christmas?
Anecdotally, I've seen some of the promotional activity starting early and earlier every year. I think the South African retailers are trying to align themselves with the so-called Black Friday shopping spree in the US, which, as we all know, kicks off on Friday. So there's no doubt that it's going to cost a penny more than it used to make sure that you secure the same sale.
How do the trends you're seeing coming through in this survey tally with what we've seen coming out of Stats SA this year, which obviously measures retail sales on a monthly basis?
I think the Stats SA number and the prediction by the respondents is very closely correlated. They generally hover around 5 to 6% increase year on year in sales volumes growth. So I think there's a fair amount of correlation between those two independent surveys.
Where are the sales going to be? Which type of goods will people be buying ahead of Christmas? Because we've seen some retailers coming out and not expecting very strong sales growth, although we have seen durable goods retailers like JD Group, Lewis, etc., reporting a big pickup in sales as the year progresses.
There's no doubt if that one looks at the three sub-sectors of the retail economy, if I can call it that, durable sales, durable goods, is definitely in for a significant improvement year on year, where the non-durables and the semi-durables is a notable improvement, but not to the same extent. So I think you're quite right. Durable goods will definitely benefit, and there's obviously a number of reasons behind them, but most prominently around the fact that this particular category is also most sensitive to interest rates, and that's been trending down since last year.
And of course, we are starting to see a restocking of durables. Do you think the interest rate cuts we've seen over the past year and a half have been helping there?
I think it has. Certainly the more affluent consumer, which you may argue is benefits almost immediately from an interest rate reduction, is also the consumer that, if one goes back to an index a week or two ago, is at this particular point in time feeling far more confident than the same time last year. So there's no doubt that the interest rate decreases certainly gives people an immediate few rands in the back pocket. I guess it's a case of what they'll be spending on, which most retailers will be fighting out for.
You talked about discounting ahead of the Christmas sales. Of course, we've also seen a very strong rand this year. How's that also helped to keep prices low? Because lots of those durable goods are imported. Otherwise, components are imported for those durable goods. Is that also going to keep prices down?
The sustained strong level of the rand over the last 2 to 3 months, which have been trading in a far more stronger band than it used to this time last year, certainly makes predicting and stuffing the supply chain much easier, because one can take a view 2 or 3 months out, which is typically the lead time for getting those goods onto shelves. That certainly gives the retailer a lot more flexibility in the sense that they can promote those items knowing what the actual landed cost is.
At the same time, we've had lots of job losses this year in South Africa. In fact, continuing job losses. South Africans still sitting with high levels of debt, very close to that 80% of household income. Do you think they're going to remain constraints to retail sector growth in the short term?
I think it will. One of your previous interview alluded to the fact of the administrative prices, and in some ways it's taking some of the money that's released by virtue of interest rates and the fact that people, generally speaking, benefited from rather significant wage increases in relative terms over the last year. But those administrative price increases may very well divert some of those funds into things which is not available to be spending on from a retailing perspective.
And Derek, just looking at some of the discounts that might be coming to lure people into shops ahead of Christmas, what's that going to do to retailers' margins moving forward? Because I should imagine that must be reducing those margins a little bit.
I think one of the things that one probably needs to acknowledge is that even leading into the festive season, that promotional activity has made up a proportionately larger part of a typical retailer's monthly sales figures. The consumers become pretty clever. Instead of buying the promotional item and or some other things that you didn't even know you needed at the time, you end up only going from store to store, almost fixating only on those heavily discounted items. So the discount mentality is something which consumers have got better at and will probably focus on quite aggressively in this festive season.
And looking past Christmas, what would you expect retail sales to do as we head into 2011?
I think retail sales, as far as I'm concerned, will be pretty modest. I think job creation is the number one thing that will essentially provide the confidence that the bulk of the less affluent consumer market need to engage into some more substantial economic activity.
And of course, we still have that national credit tax, which is also constraining credit growth, isn't it?
That's absolutely right. I think most consumers and most financial institutions have come to grips with it, but there's no doubt that anecdotally it is still relatively tough to get access to credit, not necessarily the cost of the credit, but certainly on some of the other variables, to the extent that you need to have so-called skin in the game to get some of that money from banks.